So after we journalize or do general journals, we're going to post. Posting is the same as copying because all we're doing is copying. Actually, the journal entry is the hardest part because if you get that wrong, you then copy incorrectly. Now, I'm going to post either to T accounts or to a general ledger, and we'll talk about that in a minute. So let's move on. So we've done all of November's transactions, and we're going to start in December with the transaction. December 1st, the company paid a premium of $2,400 for an insurance policy for liability, theft, and fire, and it covers a 1-year period. The first thing you ask yourself, did I get money or spend it? You spent it, so you know the credit is to cash. Okay? So you know the credit is to cash. So you're going to credit cash. Prepaid insurance is going to be the debit. So here's what my journal entry actually looks like. So with this transaction, when I look at my T accounts down here, now you know, well, before I get there, you notice now there's numbers here. These are going to reflect account numbers, and I'm going to talk about that in a minute. But if you look down here, I decrease my cash. Prepaid insurance is an asset until I use it. So I increase it. So because the net change is 0 down here, I do nothing to the other side. So let's talk about taking this journal entry, and now we're going to learn how to post them into what we call general ledger accounts. And here is an actual step-by-step thing of it, and we'll talk about that later. But let's just go look at it. So here's the transaction right here. So what I'm going to do, I'm going to have a general ledger account for each one of my accounts. And a general ledger, if you have a chance to take a look at the general ledger in the templates, I have one called 3 per page. There's also one 2 per page. And basically it has a date, it has an item or explanation, it has a posting reference, it has debit credit, then it has balance debit credit. So what I do is I take this first transaction right here and I copy it into here. December 1st into the prepaid insurance account is credited for $2,400 and posting reference. So this posting reference right here is the page number of the general journal. I forgot to mention this, that your general journals are numbered by pages right here. So this is, so it's 2. So you're going to put, you can put P2 or J2, whatever you want, or just the number 2. So if anybody wanted to look at this transaction, they would know that it was on page 2 of the general journal. So just copy the $2,400 from here to the debit here. Now, the balance in this account is whatever you have here, $2,400, debit side. This is where the normal balances come in. So I didn't have any previous information in here, so I have $2,400 debit balance. When I'm done, my very last step is to take the account number right here, number 15, and plug it back in the posting reference on the general journal. That way I know I'm done with this whole transaction for the first line only. So second line is for cash, and we credit it for $2,400. So we go to our cash account, put December 1st, and now I already have information in here for cash. So December 1st, page 2 of the general journal, and I credit it for $2,400. So you're going to copy from here into here. Now previously, my balance was a $5,900 debit. And if you remember, assets have a normal debit balance. If I end up on the credit side here, I've done something wrong or I've spent more than I have. So I had $5,900 cash minus the $2,400 I just spent is going to leave me $3,500 cash. The last step is I'm going to take account number 11 and move it to right here. Then I know I'm finished with that. Okay, so this is now posting to a general ledger account. These are called general ledger account, and there'll be a separate one for each account, and you will just keep working on them and keep a running balance. Let's look at another transaction. So here is December 1st. I paid rent for $800. Okay, so I spent money, so I credit cash and I debit my rent expense. And here's what it looks like on my T accounts. So we're going to go through all of December's transactions, and then I'll show you what the ledger accounts will look like. So again, the journal entries are the most important things. Okay. On December 1st, I received an offer from a local retailer to rent the land I purchased last month. So I agreed to rent them land, and they're going to pay me 3 months in advance. So they're going to give me $360 for 3 months beginning December 1st. So I'm getting cash. I'm receiving cash. So I will debit the cash, and I'm going to credit something called unearned rent. This is like an unearned revenue. Basically is they owe me rent. They've paid me in advance for product or for rent, and it hasn't been used yet. So I'm going to increase my cash, increase my unearned rent. This is a liability because technically I owe them this money if they do not rent it out, actually out. Okay, next transaction. We purchase office equipment. I buy it on account for $1,800. Do I pay cash? No. No money involved. So I'm going to increase my office equipment. Hold on, let me bring up my little arrows. And I'm going to increase my accounts payable. Okay. Next transaction, December 6th. I paid $180 cash for a newspaper advertisement. Because I spent money, I credit my cash, and since I don't have an expense account called newspaper, it goes under miscellaneous. Okay, so here's my transaction. This is my journal entry. I will show you the posting at the end of the slides. On December 11th, I pay creditors on account. So I'm spending money, I credit cash, I'm paying people I owe. That's accounts payable. Decrease my cash, decrease what I owe. We'll look at one more. December 13th, I paid a receptionist and a part-time assistant $950 for wages. Spent the money, so I credit the cash and debit the wage expense. Remember, expenses are always only debited. So these are the journal entries for the first half of December, from the 1st to the 13th. The next video will look at the end of December.